Hey guys, per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So a bunch of stuff has come out from me over the past couple weeks. I've been gone at a conference. I'll link everything below in the description so you can check that all out. Did a podcast with Ledger, write up on Bitstamp, write up on Bitcoin, write up on Ripple. Go ahead and read those if you want. Real quick, back to the Bitstamp thing. The main 2 points for this were, the first being that there's an instant order option on Bitstamp, meaning you can read what it says here. I didn't really know this existed, but basically it was a massive 5,000 BTC order that was just filled versus the 5,000 BTC order being instantly wicked down on Bitstamp only. So using that, someone was able to manipulate the BitMEX price, because at the time they only had two exchanges in the index for the derivative, and you get stuff like this where Bitstamp gets decoupled, and meanwhile the rest of the market's like, whatever bro, we're using a real index. So they've since added Kraken back to the index. I don't think it's going to really help long term because it's not really a robust index in general. At least with Deribit, they have 5 or 6 in the options, and then 33% of, they pick 3 and then divided by 33% based on whichever ones are most closely correlated. Anyway, that's still not great, but it's better than what BitMEX has. Alright, so let's talk about charts. CME, you can't ignore the CME stuff anymore, mainly because they're pulling more volume than like Binance. It's in some days at their height. This was May 13th. I think it was 1.5 billion was the notional volume. I don't think that says it here. Oh, here it is, 1.5 billion. So they're kind of bigger than most things. Not as big as BitMEX on that day. I think BitMEX pulled 10 billion notional based on BTC derivatives. But anyway, point is, can't ignore them. Can't ignore the times. Like today, there was a dump, arguably near the end of CME close for normal operations. Anyway, what I'm pointing to here, you've seen it before, futures contracts, expiry, times, dates. As far as be careful, pay attention territory, I'm looking at end of May when this contract rolls over. And then this big, massive contract. So, you know, if you're long from the bottom, or from the beginning rather, if you're long from the open, and you're forced to close because it's the end of the contract. I don't know if you're actually given the option to roll it over into the next bi-yearly. I don't know what the actual term for that is. You might be able to, but in any event, there aren't that many contracts traded on the higher time frame scale CME futures contracts. It's mainly just the current week for the most of the volume. But in any effect, in any regard, there should be some sort of something around this time. We'll see. But definitely something I'll be paying attention to if I'm in a position. You know, should you be hedged? Should you be long? Should you be short? Should you be ready to hit that button on the weekend when they're closed? These are things to think about. All right, so let's take a kind of a top side view of the markets. In general, everything's getting its 5200 cross, or about to. So BTC it's looking for a mean reversion target to 5200. ETH it's looking for a mean reversion target to 190. XRP hasn't yet, but it will soon. LTC is looking for a mean reversion target to 65. EOS it's looking for a mean reversion target to 46. XLM ADA just getting its cross. XMR just getting its cross. So looking at all these together, you know, if you like top 10 coins, if you don't like top 10 coins, I'm just looking at this in a vacuum. When I say mean reversion, I just mean it's looking for a bounce on the 200 to confirm trend. If you play it like that, for the most part, it's get ready, get set, go. So get ready is breaking the 200, get set is the 5200 cross, and then go is the 200 bounce. Obviously not always the best strategy considering how quickly this took off, but it is a strategy nonetheless, and you can see it might prove to be more effective on certain coins than others at certain times, like ADA. But XMR also looks really good to me. That's all I'm really going to talk about alts, but if we look at the market caps, BNB just continues to cruise and crush and do its own thing. It is influenced by many factors other than just trading, so it's got that going for it. It's got token burn, it's got projects being forced to buy it to participate on the platform. Whether or not you agree with that, it is what it is. And XRP and ETH from a line chart on the daily do look like continuation, bullish continuation, consolidation type stuff, you know, flags, triangles, whatever you want to call it, XMR as well, ADA as well, EOS, LTC, BTC not as much, just on a line chart on the daily. All right, so let's talk about Bitcoin, King Corn. What are we doing here? Where are we going? I was mostly out by 6K. Kind of silly of me, obviously, in hindsight, but it is what it is. And here we are. So the cloud likes 6.1 for a pullback. The volume likes 6.4. You know, and like we were talking, Ledger and I on the podcast, if we again start to consolidate at 6.4, it's not necessarily a good sign for bullish continuation. I would much rather have an ascending triangle here or some sort of bullish pattern versus, you know, dealing with a flag that like sits at 6.4 and we're pushing lower highs. That I just don't want to think about that, you know. It's much clearer if there's a pattern that says continuation versus a flag or something. I do think we'll get a 20 to 40% pullback. It will come eventually. It always comes. I have charts to show that on the next couple. So, you know, if you're like me and you're out early and you're thinking, where do I get back in? I don't want to get back in up here. It looks pretty overbought. I don't want to buy 8K. So, you know, just be patient. Let the market come to you. I haven't talked about fractals in a long time, mainly because we've been ranging and down, ranging and up. They don't perform well, just like the cloud, when we're ranging on high time frames. So what they are is when we create a lower low or a higher high, it makes a fractal. And the general idea is, while you are trending, it continues to make higher highs and fractals, right? So those are your stop losses as you're in the trade. And you can see this works when we're trending. As soon as we broke out, we did not make a lower low as far as the fractals were concerned. So if you use this system, all you do is you move up your stop, move up your stop. I wasn't paying attention to this, of course. Look, I'm going to blame traveling and the Magical Crypto Conference. I didn't want to be away from something that was going to pull back heavily. That's my excuse. So as we sit now, stop losses at 66. I think we'll bounce at like 6666 and then maybe keep going. But overall, I don't really know where this is going, because, and that, you know, speaks to the amount of charts and talking I'm doing. When I don't know where things are going, I talk more and look at more things. But as we sit now, your long, your stop loss is at 6,600. If we look at historically, Josh Rager talked about this on Twitter, so I had tip to him. But if you look historically, we've always had these massive pullbacks, 30 to 40%. Something he didn't really talk about was the fact that all of these were basically event-driven, even though there were certainly evidence for a pullback at the time. Like, you know, price wanted to pull back, and then we had a fundamental event that news-based really helped that. Meanwhile, all of these happened, and we got bull divs every single time. So we made a higher low in price and a lower low in RSI every time. So if we do that again, that's what I want to see. I want to see this. I want to see massive pullbacks, wiping out leverage, wiping out everybody who's the top longer, all that sort of stuff. I want to see that over and over again. That's how you know this is legit, this is real. Halving's a year from now, so that's in the back of everybody's mind as well. You can see currently we don't even have a bear div on this, which is why I'm hesitant to say we're even going to get a pullback soon. What I'd like to see is a higher high with a bear div. Something I could get my hands around to say this is plenty of evidence to pull back now. I'm not showing the yearly pivot. The yearly pivot is at this level. The yearly pivot perfectly called the bottom. Perfectly. I don't have it on the chart, so trust me, but you can look it up on TradingView, it's there. Something else to pay attention to as far as the pullbacks are concerned, if you go to the weekly B-bands, or just use the weekly 20 SMA, it was a buy every single time we were close to it or slightly below. So the 20 SMA right now, as inconceivable as below 5,500, it's around 5K, maybe 5,200, something like that. The 200 daily moving average is also there. As crazy as that sounds now, just to have bids there, stink bids as some people would say, doesn't hurt. Doesn't hurt. And that way, when it happens and you see all these news events and you're panicking and people on Twitter are going crazy, you're like, well, I was ready, I was prepared, this is the plan, I'm going to buy here. Buy when there's blood in the streets. But even before then, put bids on the book. Because you know there's going to be blood on the streets. The streets are going to be filled with blood. It'll be raining blood, okay? And what are you going to be doing? You're going to be laughing because you're going to get filled, and it's going to be great. Now, this obviously only works if it's most effective, most profitable if there is a strong bullish trend, which I think we're in that mode now. So, the worst case scenario for dip buying is it just doesn't stop, right? The dip that keeps on dipping, but you just got to pretend that you know what's going to happen next and pay attention as far as the bids are concerned. If we look at RSI as well on each of these dips, we never broke 50, barely even broke 60 on most of these dips. So that's something else I'd want to see. I do like how high the weekly RSI is. That tells me there's plenty of momentum here. Obviously, I don't need to see weekly RSI to understand that based on price, but it is what it is. Moving to ETH, just a few charts on ETH, mainly because it's less complicated. It's coming out of a really nice consolidation, ascending triangle, cloud breakout. It took its sweet time to break above to the target, which was like 215 or something like that. But it was the same case previously. It likes to consolidate in triangles. It likes to take its time and then just moonshot. I do like 300 and above from here. I don't like anything above 350. Mainly because of the massive resistance that it's going to have on the way up. As far as high time frames are concerned, on a 3-day cloud, I like 3-day for alts or singled cloud for alts on the weekly because alts generally move quicker when they move. So look at the 3-day, you can see we had a 3-day entry here in mid-May. Perfect, sniper-like entry on that for the cloud. That's what I want to see. I want to see the TK cross before the entry, no fake outs, boom, off to the races. Perfect, beautiful. So it's pointing to 350, 360. Again, no surprise. The previous triangle exploded to the 3618. That was bubble-esque situations. So to expect that again may be a little much, but the 3618 is again around 370. That's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.